G'day, mate. Thanks for the comment. So, I'm interested in setting up a not for profit. I get that I can take a wage and buy property, but when I got to retire, does that property have to be returned to the non for profit? There was a little bit more context to this. Let me explain how a not for profit works, some of the structures that you might want to consider in terms of going down this route, and how you can also still build wealth and accumulate assets when running a not for profit. So, the common misconception when it comes to running a not for profit business is that profit doesn't exist at all, and that is untrue. A not for profit business should still be run for profit. And the vast majority of not for profit businesses that don't run with a profit based mentality fail. The failure rates, I don't know the exact statistics, but the vast majority of not for profit businesses fail because they are focusing too much on the cause, not enough on the financial model, and it is just not sustainable. A not-for-profit, like any other business, has cost centers, and it requires a certain financial model in order to be sustainable. The only difference to a for-profit business is that the not-for-profit reinvests its profit, the surplus cash flow that it produces, into causes based on its mandate that it has created. Whether that be going back to the direct causes or donating to other not-for-profits, essentially just has to distribute all of those profits and utilize them for the purposes of giving back, not to benefit the shareholders of that entity. Now, as a not-for-profit business owner, you essentially have the ability to be remunerated by way of a salary, and there are also other incentives that you can get. The only thing that you don't get is a profit distribution. Now, typically, when we've worked with not-for-profit business owners in the past, you set them up in a way whereby their salary and their remuneration allows them to live a great lifestyle, right? Obviously not at the detriment of the not-for-profit, but allows them to have a great lifestyle and to also have surplus, so they can utilize that surplus to build wealth, whether that by buying their home or building other investment assets that allow them to create financial freedom and ultimately retire comfortably. Because why live an entire lifetime helping other causes at your own detriment, right? Once again, this is where many not-for-profit business owners get this wrong. Now, the idea here is that you utilize your salary and your remuneration, you pay tax on that amount of money, and then your surplus, you can build wealth and do whatever you want with it. That is your money, and it has absolutely nothing to do with the not-for-profit anymore. So as long as it is in your own name or in another entity that is not the not-for-profit, it is your asset and you can do with it as you please. And when you eventually get to retirement and you move on the not-for-profit or you wind it up or whatever, those are completely separate assets for the purposes of this situation. Now, there are some not-for-profits that accumulate assets within the not-for-profit, because ultimately what happens is if you do create a successful not-for-profit business, there can come a point in time whereby you cannot allocate the capital to the causes that you're looking for. Either it's not a prudent move, or there's some timing risks, or you're saving up money in order to do a bigger project, whatever it might be. And many not-for-profits actually accumulate property assets and other investments inside the not-for-profit entity, which also produce income, which allow them to then benefit the causes in the future. Anything that is accumulated within the not-for-profit itself is property of the not-for-profit. There are some rules around arm's length transactions. So if you've got that a property inside the not-for-profit and you're using it and you're not paying rent, for example, that is not compliant, and there's a number of rules around that that you need to adhere to. When you get to a certain size and a certain amount of complexity in a not-for-profit, there's requirements for audits and things like that, and those things are basically grey areas that you don't want to step into. Idea is we want to remove conflicts of interest, keep everything separate. Now, there is another common structure that we look to do for clients who are interested in having some philanthropic endeavors, but they want to have a business that is actually profitable as a standalone. And the idea is that we create a group that, as part of that group, there is some sort of foundation that is established, a private foundation. And what that basically allows you to do is you can make contributions to that foundation on an annual basis, however often you like. Your business has the ability to claim a tax deduction at the point in time where the contribution is made, but you've got some flexibility around how you choose to allocate that capital for the purposes of your philanthropic endeavors. It's basically a hybrid approach where you don't necessarily want to do a full-time not-for-profit, but you want to have a for-profit business which has a social impact, and essentially you don't want to just give that money to other foundations and not-for-profits. You want to be actively involved in the management and allocation of that capital. It's a pretty common strategy. It allows you to get the best of both worlds, because here's the big issue here. Many businesses and not-for-profits, when they do get set up, they are doing it because they're really passionate about a particular cause. And the positioning associated with a not-for-profit, particularly one that is getting started, is that there is a lot of focus on the impact, very little focus on the financial model and the sustainability. Now, I believe that the best not-for-profits are run like a business first and a charity or a philanthropic endeavor second. And the reason for this is because money is the crux of everything, right? If you don't understand the financial model of how you make this sustainable, if you're expecting you're going to be able to grow and scale a not-for-profit on volunteers, it just doesn't work. I've consulted to many not-for-profits over the years. My significant other, Anna, has done lots of not-for-profits and these types of organizations. And the most challenging thing is that individuals who volunteer their time or want to be involved in these things is usually because they want to make themselves feel good. And there's not a lot of ethic and work ethic and follow through in regards to actually doing the work, because most people are like, hey, I'm volunteering my time, I'm a good person. It can be very, very challenging. So my philosophy on this is that we create a value proposition and positioning that sets the business up for profit. So then when you do hire people, you can pay them market wages, you can pay yourself what you deserve, and then ultimately with the profits, we reinvest that to be able to create more impact. So a bit of a crash course on how this all works. This kind of thing requires expert advice in terms of structuring and also governance to ensure that you're setting this up for success. It's obviously something that you're passionate about, so you want to see it succeed, and getting the right advice is really important. So hope